Let's go. All right, everybody. Welcome to Legal Business Entities. I know this is a highly anticipated topic, can be a little bit confusing and overwhelming. So we're here to give you the information you need to start moving forward. We have our very own Bill Hulsey with us today. He's with the SCORE Boston chapter. He's one of our co-chairs, and he is very knowledgeable on this topic. Before we get started, though, I just want to talk about SCORE just in case you're new to us. The most important thing that SCORE does is offer information. We offer information to the small business community. We do that in three different ways. One is through our website. And if you haven't been on the website, score.org, take a look. You're going to find templates you can download. And we're not talking about just business plans. It's marketing plans, cash flows, budget. It's all kinds of different things. So take a look at that. You're going to find information on that comes in the form of blogs, articles, recorded webinars. So it's got a lot of information in lots of different places. So dig around, take a look. The other thing we do is give information through our workshops and webinars. Most our webinars, we do have a few in-person workshops offered locally by the different chapters. And we advertise that information through our newsletter and on some social media as well. And you can also find that information on the websites as well. So take a look and see what's coming up or watch for that newsletter. The most important thing that SCORE does, or the most important way we share information, is through our mentors. And our mentors are volunteers that come to us from different backgrounds. They have different skill sets, different experiences, and they want to share what they know, share what they've learned from mistakes they've made, etc., with the small business community. And we are working with those that are trying to decide if small business is right for them, those that are in that planning phase, and those that are already in business. And folks come to us needing help in any business topic you can imagine. And if we, for some reason, can't get you an answer at our local level, we will definitely go out to the national database of mentors to find somebody to assist you. Most sessions, the beginning session is going to be around 45 minutes, give or take. And they want to know about you. They want to know about your goals. They want to know about your challenges. And they're going to work with you to put together a plan to meet those goals and overcome those challenges. And the wonderful thing about SCORE is that when you meet with one mentor, you're meeting with the whole chapter. They do work together. They reach out to each other to help fill in blanks where they might not know. And it's a really wonderful experience. And it is shown that businesses with a mentor do have a better success rate. So now you're wondering, how do I get that mentor? Super, super easy. Go to score.org. You can use the QR code too on the screen. And there's a blue box. Put your zip code into that box. That will match you to your local chapter. Then it's going to ask you a couple questions, and those questions, your answers to those questions, will help that chapter find the right mentor to assist you. The format for today, we are going to use the Q&A button for questions that you want asked to the presenter. Those will go into the Q&A. It's on the toolbar of your Zoom there. It just helps us not lose track. You can put everything else into chat. It's just that I don't want to lose questions that may come through. Sometimes in chat, they can keep scrolling forward and I can't see them all. We will definitely get through as many questions as we can, so don't hesitate to get them in there. So if you want to rewatch this program, it will be posted to the score.org/Boston website. Give me about 24 to 48 hours to get it there. And you can see from the graphic, you're going to find it on the blue bar under local workshops. There's previously recorded webinar, and it will be housed there for you to look at it. I'm going to go ahead and pull this down and let Bill get his slides up and ready to go.
Okay, I'm going to share the screen, right? And let's see if I can do this today. There we go.
Yep, we're there.
And I think you taught me to see. Okay, good. Well, again, thanks, Teresa. It's always a pleasure to work with you and welcome everyone. I'm never sure what to say when it's noon when we start, but I guess it's afternoon. So good afternoon if you're on the East Coast. This is a topic that I think a lot of people find interesting. I want to make sure that it's clear to you and that, as Teresa said, if you have questions, uh, get them in there or reach out to me or Teresa afterwards, and we'll make sure that we've answered them. These things I'm going to talk about are pretty much based on general law, certainly apply in Massachusetts, or federal law certainly apply in Rhode Island. There are a couple of quirky states out west. If you're in Wyoming or something, the rules may be a little different, but these are generally going to apply for you. And again, they're meant to give you a broad and general sense to help you in your thinking as part of your business plan. And I just can't emphasize enough the point that Teresa made is that we bring a team to the table here. I was just talking to somebody in a mentoring session before we got on the workshop here, and I was explaining to him some of the people we have. We just brought in a new mentor who worked for one of the biggest lending banks in the world. Uh, you know, we have people that have had very successful businesses of their own in every field. We have lawyers, we have accountants, and so on. So people are always a little surprised at the level of sophistication that the mentors have, and then that translates into experience that they can bring to bear for you. So again, don't be shy to reach out to us and let us know. And if we can't help you, we'll find somebody in the network who can. So, as I said, we're here today to kind of talk about your the entities, and it's part of a business model and risk management strategy in part. Teresa puts on another workshop with my colleague Dave Berman, who you should also join up with, or sometimes I do it about insurance and risk management. And these are really all of a piece for you. There's one of the reasons you're obviously doing risk man or setting up an entity is to create some distance between your personal risk and the risk of the company. So, as she said, check those out. Let me start you with this because it always saddens me, especially for a startup who says, "Oh, I've spent my $500 or whatever the fee is in your state and set up an LLC." And I always say, "Well, why did you do that? And why did you, do you have a lot of money? Why did you spend that $500 up front?" So if you haven't set one up, the reason I tell you that it's a conclusion and not a premise is that the decision about the appropriate entity is going to be a function of your business plan, not the other way around. So some things that go into that decision making is, are there going to be more than one member? Is there going to be you as a single member? Are you going to have other owners? Are you going to have passive owners? Are you going to have investors? How's the business going to be capitalized? Are you going to get the money from selling shares in the company, or other members going to contribute capital to the company? How will you distribute your revenues? The structure of the organization in part is going to have tax implications for you. Um, what is your status? Are you allowed to work legally in the country? That may not affect anybody here today, but a lot of times we get people here who are on a student visa and they're not work authorized, but they can still own a company and start a company. They just can't be paid as an employee. So all of these factors we want you to be thinking about before you rush off and have an entity. And obviously, another one is if you're at a point or anticipate um, being funded by venture capitalists or people like that, then you want to make sure that you've got an entity formed that they're going to like. Otherwise, you're going to have to restructure at some point. So, Teresa, if these questions are relevant now, that's fine. Otherwise, I'll just wait till you feel free to jump in though.
Okay, yeah, he's just asking if you wouldn't either run it in slideshow mode or maybe slide over the side slide so it's the middle slide's bigger.
Okay, let me, the
Or you
problem,
would
oh,
play
here,
play from start.
I have it on slideshow. Oh, is that
Yeah,
better? Did that do it?
well, it gave yeah, it's bigger. Yeah, a little. So that'll work. That'll work. Yep. Thank
Okay,
you.
my apologies.
Nope, you're
I
good.
know a lot about the law. I don't know much about technology. Teresa's always bailing me out there, so I hope that works a little better. So, what I want to do now is talk to you about just some of the entity types and give you some of the characteristics and some of the pros and cons of them. And one distinguishing term I want to use in the beginning is that I'm going to use the term sole proprietorship to mean an unincorporated entity. You're working on your own, you are the business. And if I'm talking about a single member LLC, I'm going to call it a single member LLC. So a lot of people use the term sole proprietor to mean a single member LLC, but I'm not going to use that. So when I talk about sole proprietor, that's you doing business on your own. You don't have any formal entity. A lot of people get what's called a DBA or a business certificate, a doing business as certificate. That's not a legal entity. That's just an alias that you sometimes have to file with the state or the city or town you're working in that says, my name is Bill, but I'm doing business as, Ace Legal Services or something like that. But the sole proprietorship or the DBA provides you with none of the benefits of having a corporate or a company uh, formal status there. Um, the Obviously you're taxed individually. The taxes come through on your Schedule C if you're familiar with that, and so on. I don't know why that's in that category, but obviously you must be work authorized in the States if you're there as a sole proprietorship. So the most common and generally the entity type that fits most people is called the limited liability company. Every state that I'm aware of has a version of this. There's a uniform limited liability company set of regulations that most states follow. Um, and it can be a single member, as we talked about, single member LLC. You can set it on your own, or you can bring in multiple members. Um, the limited liability company is beneficial to you in that it's disregarded or a pass-through entity. So that means there's no taxation on the corporate level. The LLC is not taxed, only the individual member or members. If it's a single member LLC, you're going to be recording your business expenses on Schedule C. If it's a multiple member, you're treated as a partnership, and so you have you'll file your expenses and so on what's called Schedule K. And if you have a multiple member LLC, even though a lot of the tax packages are very good that are out there for tax preparation, you may want to talk to one of our accountant types to make sure that everybody understands what that's going to look like, what the taxation structure is going to be, and so on. Um, the main benefit of all of these companies we're going to talk about from here forward, one of the main benefits is that it provides statutory and common law protection for liability for the activities of the company. So in most cases, you can't be sued for debts that the company incurs as long as you run the business properly and keep your personal assets distinct from the assets of the LLC. And the limitations there are that if you commit malpractice, if you're a physician with an LLC or somebody, a lawyer, for example, or if you engage in some sort of tort where you have a duty to another party and you breach that duty. But for most of the general business expenses, you get sued on a lease or something. As long as those uh, agreements and those arrangements are in the name of the LLC, your personal liability, your home, your bank, your personal bank accounts are not subject to liability there. And that's when you attend the other seminar on risk management, you'll hear about the rest of the risk management strategy that we suggest. But this is an important piece, and it's, typically in mass, it's just a little over $500 a year for that. And that's very typically money well spent if you're up and running on your business. Um, there are some kind of nuanced variations in the LLC, and certainly that's true in many states. Massachusetts is one, although I'm not sure that Rhode Island, if we have anybody from Rhode Island, I'm not sure they recognize these, where you're a professional limited liability company, and that would be for people in the law, health fields, fields that are regulated by the state, where you have to get some sort of licensure in order to practice your profession. Um, the In addition to the benefits that I talked about above, what it also does is if I'm a lawyer in a PLLC, a professional limited liability company, and one of my partners gets in trouble for malpractice, I'm not going to be liable for that. So that's a nice structure if you're a therapist, a dentist, a doctor, a lawyer, or something like that. So the the for-profit corporations, moving on, this slide is a little inaccurate. I um, didn't clean it up, but the S corporation, let me flip it. I'm going to talk about the C corporation first, and then I'll move back. The C corporation is a good format if you're going to capitalize yourself by selling shares as opposed to having more members come into the company. Obviously, if you're anticipating acquisition or participation by venture groups or other groups, they're typically going to want to see a C corporation because they want to own those shares, but they don't want to have the the liability that a member might have. Um, One downside is that C corporations, with one exception that I'll talk about in a second, is subject to double taxation. So the C corporation is taxed at the corporate level, and then when distributions are made in the form of wages to the employees or distributions to shareholders, those are going to be taxed as well. In the smaller company, it's not a huge issue. If you get up to where you're making significant money, that tax benefit, pardon me, or tax burden can be significant. Um, the other benefit, if you're capitalizing your company as a C corp, is that you can sell those shares. And I'm not talking about publicly traded C corps, which is very complex, but you can issue those shares to people, even if they're non-resident aliens. So, pardon me, that can be a benefit to people. Now, for a lot of smaller companies, whether an LLC or some partnerships or a C corporation, there's an opportunity to take what's called the S corp election here, and that is uh, it's not actually a separate entity. It's a type of election that a company can take if they meet certain criteria. And the primary benefit of that is it takes off the taxation at the corporate level. The S stands for small corporation. So what it recognized is that, a smaller corporation probably can't sustain the burden of double taxation. So there are these limitations there that we'll go through. Um, it has to be fewer than 100 shareholders, and all the shareholders have to be U.S. citizens or permanent residents. So if you've got folks that want to participate in the company that aren't citizens or permanent residents, you're not going to be able to meet this. It has the same limitations on liability as the LLC or the C Corp. And again, the other benefit, in addition to having non-participating shareholders, just passive shareholders, is that there may be some benefits to you in how you're allowed to distribute your earnings. Typically, an S corp, especially a small one, can take the owners of the company, if they're working on it, can take some of the income as employment-based income, W-2 wages, and then they can take the rest of it as a distribution. And depending on the rest of your tax status, it's something you need to really have your accountant look at. That may result in a lower tax burden for you. So that's why people take that S corporation as opposed to just staying with their LLC or their C corp. Any questions there before I move forward?
No questions.
Okay, thank you. Um, so the next entity type is a professional corporation, which is like the professional limited liability company in that it is only available for certain types of uh, occupations or professions. So you have, again, like the LLC, you have to have been licensed by your state to be a healthcare provider, a lawyer, and so on. The corporate tax rate, again, is like the regular corporation. But again, the benefit of the professional corporation is that it insulates the individual professionals in the corporation from liability for malpractice or actions of the other members of the corporation. So if I'm working with a bad lawyer, and they get in trouble, it's not going to affect me. This is a category that you're typically going to want your accountant to look at, just as you would with the PLLC, the Professional Limited Liability Corporation, or certainly when you're considering the S Corp election to determine what are the pros and cons going to be, what are the costs going to be of doing this, and if the end of the day, if it's going to have any positive benefit on your bottom line there. So the next one, and this is a wave that kind of, I don't know, came and went a little bit, but these are called benefit corporations, and you probably heard of them. It was a way to try to account for people that are in for-profit businesses, but want to act a little more like a nonprofit, and they want to do good work. They still want to make money for the company, but the in Massachusetts has a good law here, and many states do now recognize these. The basic duty of a for-profit corporation is to maximize shareholder value, and anything that moves away from that in a for-profit corporation, particularly one where the shares are held by people that aren't participating members, can open you up to a lawsuit that you're not maximizing my value. So the benefit corp allows the directors and the officers to say, you know what, we're going to pay our people a little more than the competitive wage. We're going to contribute more money to charity. We're going to do some things that make us look like a better corporate citizen than just trying to return the highest amount that we can to you, the shareholders. Um, so they're there that you have to have formal oversight of the public benefit mission. There's increased accountability. You have to report more detail about your business, how you're expending your money, and so on. And there aren't, I don't hear about a lot of them, but there are certainly companies that still want to go this way. And with that certification, they do get the benefit of not being as liable to the shareholders, saying you're not maximizing my benefit, which in certain situations, um, can be meaningful. So the next one is a partnership. And partnership is just another kind of way of saying the LLC, the multi-member LLC. and this is when two or more folks get together. There's no taxation at the partnership level. And again, the partnership income and expenses are reported on a slightly different schedule. Um, but it does allow you to treat some of that income you might receive slightly differently. So if you're considering a partnership, or if you're in a multi-member LLC, you probably want to, even if you're going to do your own taxes, you want to at least get some guidance from a CPA in the early stages, just to understand that you're taking advantage of uh, the partnership structure, and that you're doing it in a way that is appropriate, and you're accounting for the rights of each of the partnership members. And then here we have an entirely different beast, which is the nonprofit or tax exempt organization. And we get a lot of people that want to do this and set up a nonprofit. That's a charitable goal they have. So, just to make a distinction first, the nonprofit status is conferred by the state, and the state looks at your application, and it determines that the work you're trying to do is in going to benefit the public somehow. Like, I had a client earlier today who wants to provide kind of hair care and grooming services for people that don't have the money or the access to go to the salon or what have you. But they need to look sharp to go out and look for a job or keep their current job or whatever. So, we talked about why that would be a good thing for certain people, and that's obviously, there's a lot of charities, schools, churches, and so on. But the state makes that determination, and then the IRS makes the determination after the state has approved your nonprofit status that you meet the requirements to be tax exempt. And what that means is that your revenues that come from the tax exempt operation are not going to be subject to federal income taxation. And typically, most states follow the federal rule, so you're not subject to state income taxation either. And that can be a real benefit for a nonprofit, because the thinking is that you're going to turn most of your revenues back to your mission or to your beneficiaries and so on. The People always want to know, can I make money as working for a nonprofit? And I say, of course you can. If you think of the president of Mass General Hospital or Harvard, uh, or they make a lot of money. They're very highly compensated, and you can, depending on the size and structure of your nonprofit, you can be very well compensated as well. So there's no limitation there. The limitation is on the fact that you can't own the company. So if the nonprofit or the assets of the company. So if the nonprofit were to go out of business, those assets and any cash or any assets that you have would have to be distributed to another nonprofit. Um, so those are the filing forms. It's there's a little, because you're tax exempt, the transparency required of the organization is a little or much greater than that of a for-profit. Like, for example, if you are ever interested, you can go look at the college you went to or the hospital you've been at, and you can find online, depending on the size, very, very detailed financial statements. Who's the top 5 or 6 people who by salaries in the company, where the money comes from, where the money goes. Some of these can be 30, 40, 50 pages long, but even smaller nonprofits that you might be working with, if you ever have questions or if you ever create your own, you need to know that the public is going to be able to see um, these documents that you're going to file, and they're going to know who's getting paid what and actually where the money goes. And again, that's the trade-off for you to get the tax exempt status. So a little extra filing work there, a little extra transparency and scrutiny. But and again, if you are thinking about it, and if you're trying to decide, am I a not-for-profit or should I really just be a for-profit? That's a conversation to have with me or another member of our. We have a very strong nonprofit practice group, and get in touch with one of them, and they can help you sort it out and do the kind of thinking that you want to do for any of these entities to determine if what the right entity structure is and what the right path is. So just a few more things here. One is, where do you want to form the entity? Now, I'm going to assume most of you are here in Massachusetts or Rhode Island, so there's no benefit, no matter what you see on the internet or somewhere else, unless you're a very sophisticated company or being acquired by venture capital, to be in any state other than Massachusetts, or if you're in Rhode Island, in Rhode Island. Part of the reason is that you're going to have to, if you're if you set up in Delaware but you're operating in Massachusetts, you're also going to have to pay to register as a company doing business in Massachusetts. It used to be back in the day that Delaware had more sophisticated, certainly for-profit uh, jurisprudence around the rules for corporations and so on, but that is really not the case anymore. Um, I came across recently a bunch of people uh, creating entities in Wyoming because you don't have to disclose the members of an LLC in Wyoming. So unlike Massachusetts, where when you go to the Secretary of the Commonwealth's office, you can see who the members are. In Wyoming, you can't do that. Um, so I suppose if that's a big issue for you, then you might want to consider a state that has that sort of privacy. But again, if you're going to operate in Massachusetts, you're still going to have to register here, even if you've got that Wyoming registration. So again, we're always happy to talk to you about those details, but for the most part, for 90% of the people we talk to, once we decide with you what the right entity is, Massachusetts is very most often the best jurisdiction for that. The foreign qualification is, again, if you are either in another state and are doing business in Massachusetts, or if you're in Massachusetts and doing some of your business in another state, and doing business is a term that's defined in every state, then you're going to have to register to do business there too. And that typically means going through the process similar to the one that you would go through here to be qualified as what's called a foreign corporation. A couple of the steps that people don't think about when they're first setting up. One is you have to reserve your name to make sure it's there. And the link I have at the bottom of this slide, nolo.com, if you just type in nolo.com, set up LLC in Massachusetts, they have a great step by step. You don't need to hire Nolo to do that. We can help you with it, but they really have every step there and links to every page you have to go to get your IRS number, EIN, and everything else. So it's a good source for that. But one of the first things you do, even if you're considering, is you go and you check to see if the name you want to use is going to be available to you. And you can reserve that name for 60 days. And the other one I just want to point out is that every entity in Massachusetts has to have what's called a registered agent. And the registered agent has to be an actual physical location. It can be your home address, but people sometimes don't want that on a public document, but it cannot be a post office box. And so people use registered agent companies. I think UPS does this and FedEx may as well. But you have to decide who's going to be there to accept service if somebody wants to sue you or if the state wants to get in touch with you. So that's what that is there for. If you are forming a an entity of any type, and we'll go through these in a little detail. If you're in an operating a multi-member LLC, or if you are in a partnership, you want to have a partnership agreement. That's a written document. It's not required, but it's strongly recommended that spells out the rights and the responsibilities of the members or the partners. And again, they're pretty much interchangeable. You can always hire a lawyer to do that. We have templates that we talk people through to address things. And some of the issues you talk about are how you're going to capitalize the company, who's going to make what contributions, how you're going to participate in the revenues or the profits of the company. A lot of times we encourage people to spell out who's going to be responsible for what sort of work of the company. One of the things we see kind of frequently is you'll have a company, a multi-member LLC or a partnership where one person knows how to deliver the service, and the other person knows how to run the back end. They're going to be the administrative type, and they want to be partners, but sometimes they realize that the market for the person who delivers the service, market compensation for them, is different than the market compensation for the person that's going to provide the administrative services. So the operating agreement anticipates that and gets that question out on the table and gets it resolved up front so that 2 years down the road, one partner says, hey, I'm bringing in all the money and I can hire somebody for $50 an hour to do what you're doing. So this is a good way to avoid it. I tell people it's kind of like a prenuptial agreement for partners or for multi-member LLCs. If you are in a corporation, you're going to have bylaws, which is another formal document that's going to spell out the rights of the directors, the rights of the shareholders, what happens with shares that a person may want to sell, and so on. So these are all, some of them can be quite detailed. And again, I'm not talking about um, publicly traded corporation shares, because you really can't do that without having an expert that you're going to have to pay for. Another document, if you're issuing shares, is a stockholders agreement or shareholders agreement that explains their rights, when the shares can be sold, and to whom they can be sold sometimes. We talked a little bit about the S Corp election or the S chapter election. Um, just another small document. When you create this entity, you're going to go to the IRS and get an EIN number. And I think we talked about the DBA, which is a simple alias saying I'm going to be operating under this name. And corporations and entities can have a DBA as well. You can set your LLC up as Hulsey LLC, and I can still operate as Ace Legal Services, for example, under my DBA. Another thing we should probably, I don't think we cover it in this, but you might see is something called a safe agreement. These are the industry and the market has kind of created ways to standardize people who want to invest in companies. And there's a series of, I forgot what the acronym stands for, but it's SAFE. And it's a nice way it's another document if you have people that are anticipating helping you fund your company to agree on a set of kind of predetermined terms that are generally fair for both parties, which when you're in a situation where you're needing capital, sometimes the person with the capital can try to be a little overbearing. So the safe agreement is a way to try to mitigate that, if you will. So that really is it. As Teresa says, if you don't have questions, I think that's all the overview that I can give you. I would echo again what Teresa said, which is to get with us in any question you have. Don't worry about whether you think it's trivial or non-trivial. We're here to answer those. And a lot of times, the question that you think you want to ask turns out to lead to another one that maybe you hadn't thought of, and that's where the team idea comes in, and we start teasing some stuff out. So again, just come to us anytime. You've got all our contact information, and if you don't have any questions, we will thank you for coming today.
Well, I do have a handful of questions, Bill.
Oh,
And since we
okay.
do have time, yeah, and since we do have time, these are specific to a person's situation, to these people's situations. So
Okay.
you
Well,
can
we'll see.
decide what you can answer and what can
Yeah.
be left to a mentor. But
Okay.
I was told by my accountant that I should add my kids when filing taxes because I want to eventually add them to the business. It's a very small cleaning business.
If they're, I don't know why your accountant would say that. Let me start with that. So you should ask them what they mean. Do they want you to list them as members of the business? And are they minors or are they adults? But there's probably an easier way for you to, um, like through your will, for example, or when you're ready to get out of the business, to address that than do it up front and create potential tax liability for them. So that would be my short answer. But you can give me a call or we can connect you with one of our CPAs. But I think the accountant, you would want to dig a little deeper with the accountant and understand what the tax implication would be on adding your children to the company as members, and how much of the company you'd be giving them, how much of the distributions, or is this something that can be accomplished later, as you said, when you're ready to let them take over the business and for you to step out of it.
And just before I read the next question, if you submit a question anonymously and then the questions are meant to be linked together, I can't tell. So please consider submitting your questions with your name if you're asking multiple questions that should be put together. I'm just putting that out there. Okay. If I have a service-based business, and if I plan to add senior associates to the business, say in 5 years, then would a S corp be better, or would I do a partnership or an LLC?
Okay, so again, the S corp is just a tax status. You're going to either be an LLC, multi-member, or a C corp. So when you say a senior associate, you're going to add them. That means you're going to give them an equity position in the company. Is you can answer that or while I'm talking, but you know, just giving someone money to be a good worker and so on is different than giving them a partial ownership, which is what you would be doing if you were issuing stock in a C corp or if you were issuing uh, um, membership position where you'd be changing your operating agreement and so on. So if there's a lot to talk about there, and certainly people are incentivizing their workers by saying, I'm going to give you a piece of the company. So there's no reason not to do that. Um, and I guess we'd have to know a little more. You typically would not be issuing C corporation stock, but if you were and you met all those criteria, they're U.S. citizens, permanent residents, and so on, you would just want to be able to talk to your accountant and say, what's going to be the impact and the benefit of this, not only on me as the principal owner, but on these people that you're now issuing uh, your ownership stake in, if I can call it that. Does that answer your question?
Guess we'll find out. Okay.
Okay.
Next question. I established my company as a C Corp when I purchased my franchise 11 years ago and
Mhm.
financed it through my IRA fund. A new 401k account was set up to handle the shares. It has remained as a one shareholder company. Now I am no longer a franchise and I want to dissolve the C Corp to convert it to a one person LLC. Is that possible?
It's possible. Y It might be expensive. I guess it's going to be hard to know this in the chat format, I think, or the Q&A. Um, If you haven't, franchises typically want to see a C corp. You're right. But you might ask your accountant if you can get if if you want to keep operating the business, but you just want to change your entity type, you might ask your accountant if you can get to the same tax position just by taking this S corp election. If it's a single, if you're a single shareholder in a C corp, for example, and you're a U.S. citizen or permanent resident, you might say, do I need to dissolve and create a new entity? Um, or can I just take the S corp and have the same tax outcome? I think you said you were a service industry, so there probably are no assets to transfer or liabilities. So that might be a cleaner path for you to at least explore.
At what juncture of revenue should you select how you want to be structured?
Okay, that's a good question. I think the first step is how are you going to capitalize yourself? So that question and how many people are going to be involved. And that's a question that is can change over time, but your entity in the beginning is going to be based on whether it's just you or you and others and how those people want to participate in exchange for making a capital contribution or sweat equity or so on. The question, if part of the question is when should I consider the S corp election, that's really a in the weeds discussion you need to have with an accountant because they need to look at that and say, well, if you do this, now you can start kind of splitting your income, treating your income or your revenues in two different ways, and it's going to give you a beneficial tax treatment because some of it is going to be taxed as W-2 employment-based income, but this other part can be taxed as a distribution. And it it you have to be making a fair amount of money for this to be uh, beneficial. But the other piece is your accountant needs to know the rest of your tax picture. So if you have a spouse or you've got income from other sources, all those things need to be brought into the mix so that they can do that for you. And unfortunately, that detailed analysis would go beyond what a score accountant could do for you.
Should the choice of entity anticipate a breakup among the founders or partners?
Well, that's why I called it a prenup, right? You know,
Yes.
you only get the lawyers only get involved when they don't work. But yes, I think anytime you've got more than one uh, person involved, you're going to need to address these issues, whether you address them in terms of the rights of shareholders in a C corp or rights of the members in an LLC or a PLLC or a partnership. And some of the issues are, again, and you have to do this up front, is what am I putting into the business in terms of capital or other assets? Maybe I'm bringing, pardon me, bringing the intellectual property to the table, or I've got the equipment, or I've got the sales contacts, or what have you. And you're going to have to scrub that and value it up front and then account for not only how are people going to be compensated and what they're going to do for the company, but what happens if you can't agree, if one of them wants to leave, if one of them dies. Um, you need to make sure you have, and the operating template addresses all these. It doesn't necessarily have the answer, but if you and you can certainly give me a call or get set up with me and we can go through that, or I can we can get the template to you and you can look at it and start to see the questions that you have to go through and answer in order to do that.
Which actually brings us to one of the questions that was just submitted. What you're saying is that if people could just, you can reach out to me via email and I can help book you an appointment with Bill.
Right.
We do try and keep our volunteers with booked with as an appointment. And if Bill's not available, we have 80 mentors. So we have other folks that can help answer a lot of these questions for you and get into the details with you. And I will put my email in here shortly. You can also, like I said, go to the score.org website and put and apply for a mentor there. And they can also answer a lot of your questions. So we do have a lot of questions that have been submitted, and I'm going to start narrowing down to those that are a little bit more general versus a specific situation, because really those should be addressed with a mentor one-on-one. So the next question is, what's the difference between an individual tax versus a distribution when you're talking about that?
I may have said it wrong. What I'm trying to say is if your income is coming to you as employment income, like a W-2, that you would get from your boss and your company, that's might be taxed at a different rate than a what would look like a shareholder distribution, which can be a flat rate and so on. So it's just the tax code is structured to treat certain kinds of income differently. And typically, if you're in the S corp situation, you have to take a certain amount of that money as W-2 income, and then you can take the rest of it as at what is presumed to be, again, this is global and may not reflect your specific situation, but is presumed to be at a lower tax rate. So that's one of the reasons people take the S corp election, is to be able, let's say you're a single member LLC and you've got a business and you're making, $500,000 a year, and you don't want to take all of that as employment income because it's taxed at a very progressively higher rate. So your accountant would say, well, let's take the S corp and we'll treat 200,000 of that as W-2 income, and we'll treat the rest as a distribution. But again, it's for LLCs that are making some money. If you're making $25,000 a year, this probably isn't, it's not worth the effort, I don't think.
If you are a nonprofit, can you still be an LLC?
No, the non, those are the LLC, corporation, partnership, those are all for-profit corporations and they're taxed, either individually or the individual. The nonprofit, when Northeastern University, sells $500,000, $1 million in tuition every year, they're not taxed on that. But if one of these for-profit colleges and universities sells $50 million in tuition, they're taxed on that. So the point of the LLC or the nonprofit is that you're in a field of endeavor, you're providing a service or something that, as a public policy matter, we've decided we're not going to tax that. So the individuals that receive their W-2 income will be taxed, but a nonprofit can't issue shares, can't do any of that, and no individual can own a nonprofit. Those assets belong to the nonprofit, and if the nonprofit dissolves, those assets have to go to another nonprofit.
Okay, sorry, I'm answering some some questions here. From a personal finance and liabilities perspective, is the DBA option too risky for an independent consulting?
It depends on what you're doing. It gives you no protection. So let's start with that. Um, here's, you know, again, we do another show on this, but if you're consulting in an area that's very low risk, you might, let me back up. So there's three things we ask people to think about in terms of risk. And I know we don't have a lot of time, but one is having insurance. So if you're individually consulting, even without a corporate entity, you should have insurance and you should have contract forms that limit your liability to the scope of the risk. And I can't really get much further into that. But if let's say you're doing medical device design, where the risks can be high if you make a mistake, then you want to have that third leg in place. If you're doing graphic design consulting, your risks probably can be largely covered with your insurance because your risks are probably related to, um, intellectual property issues. Somebody claims you took a design of theirs and used it or sold it to a client. So it really requires a little thought about what area your consulting is. The other thing I'll say though is that for the money, it's typically a pretty good investment. It is a tax deductible investment against your business income. But if you're really small or just starting out and you say, I'm in a low risk area and I'd rather spend that $500 on marketing in year one, but I'm going to get my insurance and I'm going to get my contracts in place, you know, it's a risk that you might take. I tell people I know what the speed limit is and I know how fast I drive. So I'm ready to take that risk sometimes.
How do you know when it's time to set up your LLC, and when in the process do you set up
Mhm.
your
That's a
LLC?
great question. So part of it, again, I want to say again where I started, which is your decision about the type of entity and the timing, which is a good question of the entity when it's going to be formed, is a function of your business plan. So if you're in let's say you're in a medium risk business and you're projecting first year revenues of $50,000, um, you probably are going to say, for $500, I'm getting another layer of protection for liability. Uh, and so that's money well spent. If I would never encourage anyone to start to create an LLC before they've done the business plan and tested the viability of the business. So if you're just, it's not a step in thinking about a business plan to create an LLC. That's something that happens later. I hope that answers that question.
So, I'm just going to wait one moment. I think that's going to wrap it for today. We did have some other very, very specific and detailed questions that were submitted, and I am suggesting that you do reach out for a mentor. It's really a much better forum because there can be back and forth questions and clarifications. And I just think that your answer is going to be so much better because it'll be specific to your needs. So please consider doing that. You can go to the score.org website, put your zip code into that blue box. If you're in the Boston area and want to meet with one of our Boston mentors, we have several. Bill's fantastic. We have others that are fantastic as well that know the things he knows or similar to it. So you can email me at outreach@scoreboston.org, which I did put in chat and through the Q&A, so you can snag it through there. And I think we're going to go ahead and wrap things up. And Bill, thank you so much.
You're welcome.
Fantastic information. And thank you everyone for spending the time with us this afternoon.
Thanks, everybody. Have a good day.